And the first pair we are going to be looking at this morning is the USOIL. And you know that since the beginning of the week, we have been profitable on the USOIL after taking advantage of that buy position at the breakout of the channel here at around the $75, and that was on Wednesday. Remember, we had a couple of breakouts at the beginning of the week. Remember, we identified a channel between the $75 level here and the $74.50 area, where we said we are going to be looking out for either a breakout of the channel or breakdown of the channel to give us an opportunity to buy or sell the USOIL. And in fact, on Monday we saw the breakout of that structure, which happened and gave us about 180 pips thereabout before the sell momentum came in. And remember, we took advantage of this move. Remember, on Monday I told you that if we start seeing selling pressure right around the $77 level, a very important structure that was broken during the course of last week trading session, we are going to be joining that decline to the downside. And in fact, we had this consolidation phase initially, and price broke down that support level of the channel had a $76.27 level to give us that opportunity to sell as well. Then we saw price come back into the channel where price had started the week, and we still held on to the expectation of a breakout of the $75 level, though we had a couple of breakouts of that structure before the final one happened here on Wednesday. And since Wednesday, price has continued to find higher highs, and in that regard we had multiple entries. We had structures identified during our live sessions, and we anticipated some breakout retest of the structures to give us opportunities to add more position to our existing trade, which we actually did. And we had 1, 2, 3. The third position was here. Then the breakout of the $78 level gave us the fourth position, and right now in the last 12 to 18 hours now, we have seen a situation where price has been finding buy pressure right above the $78.50 level. So for those who have been part of this trading journey since the beginning of the week, congratulations to you guys, as you will definitely be in over 1,000 pips in profit if we consider all the multiple entries we have here on the USOIL. Now, as we head into the New York session today, we have some couple of structures here that we are going to be using to guide our trading activity for today. And one of the structures is the $79.30 level, which has been a selling niche for participants in this market since the New York session yesterday. As you can see, every time price comes into the $79.30 level, we have been witnessing selling pressure from that structure. And one thing about that level is the fact that that level has been negating set by pressure, so we need to take into consideration what happens if price action comes back into that level. And with the current situation we have here, as price retested the $78.50 level, broke out of that structure during the early hours of today, we are seeing price approaching that structure, and at this point we need to move our stop loss accordingly. If you are joined right from this level, move your stop loss accordingly, and I'm thinking that somewhere around the $78.50 level right above that structure seems most appropriate to lock in some profit here. And if you had been holding a position since the beginning of the week, we should be having somewhere around that area as well, around the $78.50 level, to lock in some profit at that point. Let's see how price action plays out from this current structure that we are in right now. So as we head into the New York session, all highs will be at the $79.30 level, as we want to see how price action will react to that structure one more time. And what we are going to be looking forward to here is, if price breaks out of the $79.30 level, then we shall be looking out for buying opportunity to join another wave of bullish momentum, which could likely break out of the $80 level to incite another form of bullish momentum. And remember how important the $80 level is on the daily time frame. If you are not part of our live session prior to this current one, I will be showing you something on the daily time frame so that you can see how important the $80 level is. But before we go into the daily time frame, let's quickly run through what our expectations is going to be like based on this current structure we have here on the 1 hour time frame. So like I said, if price breaks out of the $79.30 level with buy pressure around the structure or above that level on our lower time frame, then we want to be joining that bullish momentum to the upside. And if a further breakout of the $80 level happens, we will definitely be thinking of adding more position to our existing trade. However, if price action gets into the $79 level, $79.30 level, and instead of breaking out of that structure, we start seeing rejection of that level again, just as it has been in the last 24 hours here. As you can see, we saw that this level has been a strong selling niche. And again, we start seeing another wave of bearish another transition of selling pressure, giving us something like a reversal pattern, probably in the form of a double top, head and shoulder pattern, whatever reversal pattern that supports selling opportunities. Then we might likely be looking out for trading opportunities at that point. But for me here, looking at this current structure, it's going to be very it wouldn't be reasonable to sell from this $79.30 level at this point in time, considering the momentum we are in since the beginning of the week. So it's a bullish momentum, so we really need to see some breakout of a significant structure to determine that sellers are coming in at this point. And remember, today is the last trading day of the week. It's a Friday, and obviously it is peculiar with the market that prior to the last trading day of the week, if we have a huge move where participants will take advantage of this buy position right here, we'll definitely want to be doing some take profit activity. And take profit activities will be reflected on the chart as a retracement of that previous impulse leg that we had. So those who are taking advantage of that opportunity will want to make some money out of it, and what they will be doing is to sell this commodity to make some money, and this will be reflected on the chart as a retracement phase into somewhere probably around our golden zone area, which is always between the 50 and the 78.6% of the previous impulse leg, probably to start incite another wave of bullish momentum. And if you look at the current structure we have here, remember we have this bullish trend line which has been guiding bullish momentum since last week here. Price might likely retrace into the structure to incite another wave. So if we start seeing selling pressure right below the $79.30 level here, we might not be selling outrightly, but if you're someone who could take the risk, well, you can do some selling there with your stop loss right above the previous structure. Very tight stop loss right above the previous structure to protect your position, since we are in profit already. And if you can lose some 1% of your account size, considering what you had made so far for this week, it's a risk worth taking. But for me, I would advise that we want to see a significant breakdown of a structure, and we shall be looking at somewhere between the $78.50 level and the $78 area. So we want to be seeing a breakdown of the structure to give us an opportunity to sell if selling momentum comes in around the $79.30 level. So if price breaks down the $78 level stroke the $78.50 level with selling pressure coming in right below the structure on our lower time frame, then we might want to be joining that counter trend opportunity back into this trend line, which also shares a confluence with the $76 level here, probably with the intention of another wave of bullish momentum. But when price gets to that point, we will be deciding if we are going to be adding or we are going to be selling further if a breakdown of that level happens. So these are my views here on the US oil. So what I'm saying here is that for those who had missed out on this opportunity here or since the beginning of the week and you are not yet in this trade or you are new to the session, well, I'm advising that we remain patient and wait out to see how price action will be reacting to the $79.30 level. So that will now determine if we are going to be buying or adding more position to our existing trade, or we are going to be selling if price breaks down the $78.50 level. And if you want to be selling here, I said you could have a tight stop loss. If we start seeing selling pressure around that area, it's a risk worth taking so that you can join the sell momentum early enough and ride the move all the way down. And if price breaks down, retest the structure, you could be adding more position to the existing trade. So that is that on the US oil, and I promised earlier that I will be showing you how important the $80 level is on the daily time frame. And remember, for our buy positions for this week, this is where our take profit target is at this point, considering the nature of the key level there on the higher time frame. So in that regard, we shall be scaling up into the daily time frame here, where I will be sharing with you how important that structure is, considering the market structure we identified on the higher time frame. So this is what we have here on the daily time frame, which we explained in details during the first session of this week. And one thing we observe here, first of all, is the fact that price action has been on a bearish momentum since the month of June. And in that regard, we were able to connect the series of lower highs here, which gave us that resultant bearish trend line you can see on your screen, further emphasizing the strength of the sellers at this point. However, when we zoom into what has been happening here in the last 3 to 4 months, we have noticed that price action was initially caught within a consolidation phase within a channel, that is the $93.50 level, which was serving as a resistance point of the channel. And then we have the support level of the channel sitting at the $75 level here. As you can see, price has been caught within this channel since September stroke the last day of November, giving us a clue that there is an indecision in that market, and a breakout or breakdown of that channel will be giving us a sign of where price is likely going to be going. And during the first day of the month of December, we saw a sharp rejection of that $80 level with selling pressure. And if you look to as far back as the last day of November here, we saw how that level also was holding selling pressure. You can see that engulfing candle bringing price into that demand zone. Then we saw another one start at the beginning of the month of December. That was last month, which led to a final breakdown of the $75 level. And price breaking down a significant structure like that $75 level, which has been serving as a demand zone, taking out all the buy position there, was a good sign that there is a tendency that sellers might likely come in at this point. And with the breakdown of that structure, we can see how price action came back to do a retest of the $80 level. So price action closed at the $80 level last year, and at the beginning of this year, we saw how price rejected the $80 area, as you can see there. Then we saw this engulfing candle bringing price to break down the $75 level the second time in a month. And that was a good signal that sellers might likely come in at that point. But one thing that made us not to continue to look forward to selling momentum is the fact that as soon as price got into the $73 level here, we saw buy pressure come in. And what this simply means is that price was unable to break the previous low. This was the previous low, and that's even the lowest point price has ever been in the last 6 months, and that is the $70 level. Despite the second breakdown of the $75 level here, we can see price was unable to break the previous low as buy pressure came in at that point, giving us a consolidation phase. And that was what we identified last week, and we were looking out for either a breakdown or a breakout of that channel to give us an opportunity to buy. But lo and behold, price broke out of that structure, giving us a buy position, which we took advantage of at the beginning of the week, right around the $75 level, and we have continued to ride that move all the way up. Now look at this. So now price is approaching the $80 level one more time, a level which has been a strong selling niche for participants in this market in the past. You can see what we have here. That level as being a strong selling niche, and this is what I was trying to explain to you on the 1 hour time frame of how important the key level at the $80 level is. So that is why we're having our take profit target at that point. And if you look closely, you can see that the key level here also shares a confluence with that bearish trend line that we identified earlier. So because of this, now we need to be patient and see how price action is going to be reacting to both the bearish trend line and the $80 level to decide if we are going to be joining or adding more position to our existing trade, or we might be getting ready to join a decline to the downside. So to add more position to our existing trade, we want to see a breakout of both the trend line and the $80 level, giving us buying pressure around the structure to probably incite another wave of bullish momentum. However, if we start seeing selling pressure below the structure at the $80 level here, transitioning into a reversal pattern on our lower time frame, a breakdown retest to structure dropping back below the bearish trend line could be a sign that our trend line is still very strong to hold selling momentum, and we shall be getting ready to join that decline to the downside if that is going to be what will be happening. So at this point in time, we shall remain patient, like I said, on the 1 hour time frame. Place our TP target somewhere around the $80 level, and then let's see how far this is going to go. And if price breaks out, then we want to be thinking of adding more position. But if price rejects that structure, then we will definitely be thinking of selling the USOIL. So going back to our 1 hour time frame and considering what we said on the daily time frame here, we'll definitely hold on and see how price action will react. So now we have said, for those who had been part of this trade since the beginning of the week, or probably you took it right above the $78.50 level this morning, well, move your stop loss, lock in some profit. And for those who had missed out on this one, let's wait and see this current structure we have here. As you can see, we have a selling niche around the $79.30 level. Let's see how price will react to that structure. If a breakout retest happens in our lower time frame, then we want to be joining that rally to the upside. But at this point, I will still retain my $80 area. You can extend it to around the $81 level. At this point, I'm not sure, but you can still extend it out to that point, and as soon as price gets into the $80 level here, move your stop loss accordingly, lock in some profit, and if a breakout happens, then we should be glad to add more position to our existing trade here on the USOIL. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section.